Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Tuesday, October 7th. The euro traded higher for the first time in more than a week. In the early European session, the pair advanced as much as 130 pips even though the pair was unable to hold onto all of the gains. The euro advanced as S&P futures traded 2% higher in the overnight session, but the euro's gains were capped after Wall Street's decline. The euro can be seen in a downtrend here with resistance seen at the trend line as it rejects price each time it gets near. Support has been found at 1.3430. The next area, if this is broken, would be 1.3275. The pound advanced during the overnight session, gaining 200 pips at one point. However, as the news spread that the two well-known UK banks will receive government funding, the pair moved lower. The pair traded in a tight range in New York as equity markets declined, and looked to finish the day virtually unchanged. In economic news, the UK manufacturing output decreased in August by 0.4% compared with analyst estimations of negative 0.2%. Decreases were seen in 10 out of the 13 industries. The biggest decline was seen in transport equipment, which fell by 2.3%. The pound can be seen struggling as it tries to find a balance here. The 23.6% Fibonacci retracement is a virtual roadblock for the pair at 1.7640. Support has been found at 1.7320. A break of that could see 1.7000 relatively quickly. The Aussie had a volatile overnight trading session after the Australian Central Bank cut the interest rates by 1 full percentage point, which is 50 basis points more than expected. The Reserve Bank of Australia continues the cutting cycle as the economic expansion cools and the business cycle peaks. The central bank cut for a second time this year after the bank cut at the beginning of September to 7%. The pair immediately responded to the news release, falling 170 pips. However, the pair quickly recovered. Once in New York, the pair was virtually unchanged as it traded through a 75 pip range. The Aussie has also been seen struggling with its 23.6% Fibonacci retracement. The area around 0.7350 has not easily been broken. As the pair weakens, we could see 0.6850 sooner rather than later. The CAD traded lower for the first time in 8 days as crude futures declined. The pair dropped 55 pips during the overnight sessions, moving along the neutral pivot point at 1.0975. The pair continued to decline in New York as crude futures advanced. The loonie can be seen stair-stepping its way higher here. The channels are very easy to spot. A break of 1.1090 could draw in buy orders and the pair could see 1.1170 or 1.1270 before running out of steam. The Swissy fell 60 pips since the new trading day opened to test the 1.1400 area, which provided strong resistance during the latter part of last week. The pair has experienced volatility intraday, moving between the neutral pivot point of 1.1415 and the high of the previous session. The pair declined about 50 pips in New York. The Swissy is finding resistance in the same area that it did a month ago, at 1.1415. The pair has several intermediate levels of support to fall back onto before its next push higher. The yen moved higher during the overnight sessions after the Bank of Japan maintained the monetary policy rate at the current 0.5%. The Bank of Japan has kept the overnight call rate unchanged at 0.5% for the 23rd straight month in a row. In the bank's words, the economy has now become sluggish in the face of high commodity prices. In the past, the bank had announced its intention to raise interest rates, although this will happen only when the economy is able to support such a move. The pair gained 180 pips since the Asian session started, as S&P futures advanced on speculation of a coordinated rate cut, but fell in New York as equities declined. The yen can be seen having a tumultuous time. The pair remains undecided on which way to head, even as U.S. equity markets had another negative day. A break of 100.22 could draw in a lot of sell orders. On the upcoming economic calendar, there are 4 top-tier releases scheduled for tomorrow. At 08:15, Canada will be releasing their housing starts. At 10 a.m., the U.S. will release their pending home sales. And at 20:30, Australia will be releasing their employment change and unemployment rate. In Asian equities, the Nikkei fell 317 points or 3.03% to close at 10,155, closing near the lowest level in the last 5 years. In European stocks, the German DAX tumbled 60 points or 1.12% to close at 53.26, and the UK FTSE managed to gain 16 points or 0.35% to close at 46.05. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 94.47 after losing 508 points or 5.11%. The S&P closed at 996, down 60 points or 5.73%, closing below 1,000 for the first time in 5 years. The Nasdaq finished the day's trading at 1754 with a loss of 108 points or 5.8%. Crude oil for November delivery was trading up 1.7% to $89 per barrel. Gold for December delivery was recently moving up $12 or 1.48% to close at $875 per ounce. In Treasuries, the yield on the 10-year note rose 34.9 basis points to 3.488%, while the 2-year note's yield gained 15.2 basis points to 1.445%. Overall, there was no economic data released in the U.S., but the Federal Reserve hinted strongly that a rate cut will occur on or before the FOMC meeting scheduled for October 28th and 29th. Overall, the combination of the incoming data and the recent financial developments suggests that the outlook for economic growth has worsened and that the downside risks to growth have increased, Mr. Bernanke said at his speech today. At the same time, the outlook for inflation has improved somewhat, though it remains uncertain. In light of these developments, the Federal Reserve will need to consider whether the current stance of policy remains appropriate. The minutes of the September 16th meeting released today also seem to lay the groundwork for a rate cut by saying, some members emphasized that if intensifying financial strains led to a significant worsening of the growth outlook, a policy response could be required. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.